All right. Well, thank you very much. And I want to welcome you to this panel. We'll be as quick as possible because I know many things have kind of pushed back. This panel is about sovereign funds and the roles that they play, how they co-invest, how they attract partnerships, what mandates they have, and what sort of asset classes they play in. I'll probably just pick up on something that was said before I go on to introduce my panel. The Nigeria sort of monoline or credit enhancement vehicle is actually up and running. So it's not just information, and so it should be writing its first transaction in the next month or two, from what I see. And the reason I know that is because it was sponsored by the Nigeria Sovereign Investment Authority. We are currently the major equity holder in that, and we're looking for capital. So if anybody's interested in taking credit enhancement in Nigeria, you're welcome. And I will talk more about that later on. But I will probably try to make sure that we spend a bit of time understanding what we are all doing, because sovereign funds in Africa is a new concept. I think the bulk of the ones you have seen formed have only been in the last 5 to 10 years, apart from perhaps Botswana and Algeria that have been a little bit longer. The reality is that, as a consequence, many of the funds are not yet fully invested, and so there are some things we'll be discussing here that are more conceptual. The good news about being young also is that we have had a chance to innovate. So there are many things that we're doing among the sovereign funds in Africa, be it Kenya, be it Uganda, be it Nigeria, be it Senegal, that I think are very interesting and should be shared within the group. But more importantly, I think the key thing of late has been co-investments. Co-investments is a buzzword for a lot of people, but for us it is real. And the reason is because many of us do not have significant levels of assets, and therefore using our platforms as a way to co-invest and bring other people into the continent is one thing that we think could help us make the impact that's expected of the sovereign funds. But more importantly also, many of you, when you come to invest in Africa, especially the foreign investors, you look for partners. You look for partners that will help you come into the continent. You look for partners that will help you go into the right asset classes. And you look for partners when you come into political risk situations. And this is also part of the roles that you have seen the sovereign funds in Africa play. And so with me today, two friends of mine. The first is Dr. Wagacha. Dr. Wagacha is the chairman of the Kenya Sovereign Wealth Fund. And next to Dr. Wagacha is Mamadou Mbaye, who is executive director in charge of fundraising, energy and mines at FONSIS, which is a sovereign fund of Senegal. And I'm going to turn around and focus on partnerships. But before I do so, maybe let me just talk about what we've also done in Nigeria, just so that there's a bit more context. Again, like Kenya, we have Future Generations Fund, Stabilization Fund, and Infrastructure Fund. And the way we've gone about it, and total assets now, including assets, direct NSIA's assets and assets under management, and cumulative return so far is about $2.2 billion. And I think this year is going to see a significant contribution, not just of cash, but also of assets, which is something we're trying to work with the government to actually transfer assets. Well, in terms of preferred asset classes for us, one of the things we've done in the Future Generations Fund, which we have invested as follows. 1/4 of it is in private equity, and it's 2/3 secondary interest and 1/3 primary interest. So we tend to actually buy secondary interest so that we can get past the J curve very quickly, and also provide, in some extent, an exit for those who are investing, who have invested a little bit earlier. The second thing we've done, and to that extent, we've actually, quickly, I think we have investments in about 32 different funds, of which 7 are in Africa, and we continue to allocate to this. We like private equity, and we like it because we believe that Africa, this is one of the missing pieces for the SME sector in Africa, and that's equity. Debt is easy to raise. Most of these companies are leveraged, and that's why many of them die very quickly before they even get a chance to start. Equity formation is very important for African companies, and this is one of the areas where we want to use our capital to drive capital formation there. The second thing we do with the Future Generations Fund is public equities, of course. Again, 2/3 emerging markets and 1/3 developed markets. That didn't work too well last year because developed markets did very, very well. Who will have thought that with what was going on in the US? But again, all in all, it was not a very bad performance. The other thing we've done is we created a group called Other Diversifiers. And here is where we invest in leasing companies. We're invested in 2 aircraft leasing businesses. We're invested in healthcare royalty businesses. We're invested in all sorts of commodity funds that are actually helping us hedge our returns. And then finally, hedge funds, from global macro, long short. So it's a fully diversified 1 quarter, 1 quarter, 1 quarter, 1 quarter across all these asset classes. And that's how we've just wanted to start and have those baby steps. But the key thing for us now is infrastructure. And infrastructure, we're going about it in 3 different ways. The first is investment in 6 areas of focus. For us, that's agriculture, it's healthcare, it's roads, it's power, it's real estate, and it's midstream oil and gas. Those are the areas where we invest in directly. Secondly, we're creating co-investment funds, and we've created and launched 2 last year. And one of those is with UFF Agriculture, where we seeded 25 million, they seeded 25 million, and we're raising 150 million to do agriculture in Nigeria. And there's a lot of interest in that, and hopefully before the end of this year, we'll have that closed. And then also, we're doing something in real estate. That's been very difficult because of the exchange rate challenges in Nigeria. The third thing we're doing is creation of financial institutions that will help. And to that extent, we've seeded the monoline insurer in Nigeria, which is providing credit guarantees for infrastructure. We've also seeded a mortgage refinancing company. We've also seeded a development bank of Nigeria. So all of these things are things we're doing. So along the lines of what everybody else is doing here. But let me just narrow down on partnerships. And I really want to see how you have gone about, you talk about crowding in partners. And as Dr. Wagacha is developing Kenya Sovereign Wealth Fund, perhaps you can also tell us your thoughts as to how you intend to bring in partnerships. I will say this, it's not as easy as it sounds. Everyone talks about it, but when it's time to write the check, everyone develops a shorthand very quickly. The reality is this, Africa is challenging, but when the sovereign wealth funds in Africa start to play the role they're expected to play, I think it makes it a lot easier. We have had situations where we have actually had to stand up and play that role, which is helping people navigate the political risk of Nigeria. So let me start with you, Mbaye, because you use the phrase crowding in. How are you doing it? How do you plan to do it? What have you learned from the ones you've done? Perhaps you can just share that case with us. And I think we'll go to Wagacha and we'll start to round up.
Yeah, we said it earlier, what we need in Africa. I mean, Africa is a project in development. There's a lot of greenfield. What we need is project finance. And project finance is very exotic for asset owners globally. I mean, it's very difficult to allocate funds to those projects because of risk profile and stuff. So we need a way to connect the dots. As Mr. Lutulu said, actually, for ESCOM pension fund, they don't invest in greenfields. But we need in Africa, I mean, that type of money. And the same thing is true for SMEs. They're really struggling to actually get funding from the banking sector. We have in West Africa, a very fat banking sector in the sense that they have very wide risk margins on lending to government because of the risk rating of our countries, which is actually very low. So they don't have any appetite to lend to private sector. So what we've tried to do is 2 things, really to get into that greenfield funding issue. Actually, Mr. Solomon Asamoah, just in the earlier panel, spoke about that construction risk that has to be allocated somehow and covered for. There's an article I wrote like 12 months ago on Institutional Investor Network, which was just saying that we need a fund which is going to actually take the construction risk and associate that to a second fund which is going to take the debt side of those projects, de-risk it. And this type of ideas are all around the idea of linking asset owners globally, which are allocated today at negative yields, to the debt side of our project finance project. And I think ultimately we need those trillions of dollars to develop the continent. DFI money will not be enough, and there's something as a global agenda here which is very interesting to do. And for SMEs, we are involved in structuring a subordinated debt fund. Initial initiative is actually in structuring with AFDB. And the idea is really a fund which is going to be able to allocate quasi-equity and debt to those companies on the idea that if you have that entity ready to actually partner commercial banks, you're going to make the project less risky for them and be able to actually unlock some of those funding. So we are on the role of the public entity really trying to facilitate the funding issues of the private sector and of those project finance project. And finding ways to actually unlock some of the difficulties we're finding here, finalizing our projects in the continent.
Terrific, thank you.
I'll take just a minute. Fortunately, this debate is taking place in an environment where most countries that have sovereign wealth funds and most of the beneficiaries of commodity cycles, like South Africa and Nigeria, are rethinking the growth model to prioritize investment rather than consumption in growth formation. And we've had that debate from very eminent thinkers, like your former governor of the central bank.
So we have 1 minute,
Yes.
because we have to go to Q&A.
Okay.
So we have 1 minute for you to wrap up, so we can go to Q&A.
Where from?
We have 1 minute to wrap up,
Oh, okay.
and then we go to
So I'll take a minute. So fortunately, the rethinking of growth is taking place as we speak. And you've heard of keywords about that debate, which would shift resources for GDP growth to investment rather than consumption. We had a major sort of statement on that from Nigeria, former central bank governor. We've had it in this environment from politicians about the radical transformation of the economy. The point is, I think to really take advantage of that debate, the sovereign wealth funds and pension funds, for that matter, on the continent, need to log into that debate. And the way to help, I think, as I said, is to have a sort of clearinghouse of projects that will drive that transformation, projects that will be part of the transformation, and for information on those projects to be profiled and highlighted in a clearinghouse where people investors can pick up the portfolios that they want to hold on to. So the important thing, I think, about partnering in this case, in this new thinking, is to have a clearinghouse or a receptacle of projects where sovereign wealth funds can lead the way, sometimes in collaboration between, say, Nigeria and Kenya. You pick up a project which is well profiled, hosted, as I said, in an institution like the African Development Bank or an institution like the PTA Bank, hosted and professionalized to profile projects so that a sovereign wealth fund, since you are not the investor, you are looking for a rate of return, can invest in those projects.
That's a good idea. Thank you very much. All right, we'll I think we'll have 5 minutes for Q&A, so I'll probably just take the questions if there are any, or maybe the first 3 questions. Any questions from the audience? So I see the topic is extremely clear. Nobody has a question. All right. I'll just probably add to one thing to this, and we'll just wrap. I think to your point, Dr. Wagacha, one of the things that we have tried and seen, and I think your point is very compelling about having a clearinghouse. It's interesting, and we'll see how we can implement that. But more recently, Nigeria and Morocco, the Nigeria Sovereign Investment Authority and Morocco Sovereign Wealth Fund. Unfortunately, Tariq isn't here. I hear he canceled this morning. And I spoke to him yesterday, so something must have happened. But we had a collaboration in December between Nigeria and Morocco, and it's quite ambitious by way of the collaboration. The short-term aspect of it is we're doing fertilizer, for example, to help agriculture. So Morocco has phosphate, Nigeria has natural gas for urea. And this is evolving through an immediate revival of blending plants in Nigeria, and we're now, now signed a partnership to develop a Trans-Sahara pipeline for gas, taking gas from Nigeria to Morocco. That's going to be a big project, and that's not something I think we will I, for sure, will not be in my job by the time we finish that. But the reality is that it's going to take us time. But this is the example of the kind of partnership you're seeing being formed between sovereign funds. I think the key thing is for the sovereign wealth funds themselves to start talking. And there's a clear view here that being young organizations, it's still early for us to start to make the impact expected of us. But partnerships are not impossible to do. They're also not easy to do. We ended up in Nigeria, the UFF Agriculture Partnership was actually a registered permanent establishment vehicle. It was a Mauritius registered fund with a management company registered in Nigeria. We have since then formed 2 teams. They put some people on the team, we put some people on the team, and we've developed a pipeline of transactions that is actually beginning to attract people. When you develop these transactions, you actually go out there and sell it. And so it's a very, strange situation when you are an investor and at the same time, somebody acting in the role of a principal and trying to, an agent and trying to get people to invest. So all in all, I think, the point here is the following. African sovereign wealth funds are coming of age. Kenya was, is almost there now to become a proper fund in the sense that it starts to play this role. And Dr. Wagacha, we have to thank you for that. Well done. I think it's been the persistence that you have shown that has brought this much credit to Kenya. And we've seen the work being done at places like Senegal and Morocco and Nigeria, Uganda, and many places. The summary here is that Africans, we have learned that allowing ourselves to go through boom and bust cycles doesn't make any sense. At the moment, the reality is that we have an opportunity to show leadership in terms of how we manage our resources. And I'm glad to see that this is happening across the board. We're going to be reaching out to many of you for partnerships and working together. And I think I see a lot of my friends from the US here. And many conversations will come from here. So thank you very much, everyone. Thank you for listening. And we'll see you around. Thank you. Thank you.
Doing business in Africa. You can't afford to be without Africa Investor.